morning, UPBOptionMillionaires.com. Thursday, March 23rd, 2017, 2.5 hours before the opening bell. S&P 500 futures up about 0.2%, getting a little bit of a bounce after we saw a really nice pullback. One of the biggest pullbacks we've seen in quite a while. Actually, 100 and something trading sessions without a 1% move to the downside until this week. If you look at the market since the lows March 2009, the trend remains up. Anyone buying the dip since cavemen were trading rock futures back in 6 trillion BC has been doing pretty well. Conversely, calling a top has not been a good endeavor in this market. The trend remains to the upside despite this pullback here. But when is that pullback going to end? Is this bounce going to last? We'll get into a couple things here. Of course, we'll look at the VIX because I think the VIX, I talked about this in a blog post, 13 has been a tough nut to crack this year. We saw it at the start of the year briefly, but we were not able to hold over that 13 level. You can see it here. Right at the start of the year, we got up to about 14. Again, the spike up got us to about 13, and you can see each of the times since the start of the year, we got up to 13, rejected. We did have a paint under 10 earlier this year. I think ultimately that is going to happen again for the VIX, which is going to imply higher stock prices, believe it or not. So the VIX, something to watch here. As long as we hold under this 13 level, start to pull back, and you look this morning, the VIX is down 1.5%, boding well for some upside. Real quick, S&P 500 futures here. We're bouncing off the lows that we saw after European markets opened, but not at the highs that we saw in the overnight hours. So S&P 500 futures up almost 0.25%. Again, trend remains up, and you can see the pullback we had this week. Again, one of the bigger pullbacks we've seen in a while. Since the election, you remember this, we were down, limit down here on S&P 500 futures election overnight, and we had a nice pullback here. We're starting to bounce. So let's look at some charts here. I brought up this, and look at the action yesterday. Came down to support, and that's where we bounced from. We are now back in the channel again for IWM, the small caps. They were the leaders out of the decline that we saw into the election day. Remember, it was something like 9 consecutive trading sessions to the downside. Well, the Friday before the election, that candle right there, IWM was the one of the ETFs that were green that day. The SPY and QQQ were not. And then the Monday after the election, weekend before the election, Clinton was cleared from the investigation, and S&P 500 futures gapped up. You can see this gap, and we continue to the upside with the big move now coming post the election. Consolidated for a month and a half before breaking out to new highs. And now we're back in the channel again. So watch support. This has to hold. I think it will. This channel is going to hold. Hopefully it doesn't just chop around for the next 3 years. But I do think it's a distinct possibility. Again, we're going to break over that 140 level and move up to new all-time record highs here. And you can see from a longer-term perspective, more just like a consolidation. Got a little bit ahead of ourselves. The market's like, whoa, horsey. Pull back. You see momentum pull back a little bit. And we've seen that. Remember, momentum pull back just before the election. And then what happened? We got this. So we see momentum starting to pull back. And what do you think is going to happen? We're going to see the snapback reversal. Also NASDAQ, which has been just grinding higher. First red candle. Look at that. We haven't seen first red candle on a weekly basis that we've seen all year. And see the consolidation here. This, to me, again, looks like we're going to head higher on tech. And it's actually been the stronger of the bunch. You can see we're up almost 0.75% yesterday for the NASDAQ. The bond market has been doing exactly the opposite of what you would think in a rising interest rate environment. You can see the bounce over the 117 level. Bonds have been bouncing. You look over here on a shorter term chart. We're reaching resistance. We're coming up here at the 122.50 level. And I think that'll be a good spot to play for a pullback back under 120, especially if we get up and momentum starts to roll over. Longer term, from my personal perspective, I think the bond market is going to continue to sell off. We're going to ultimately come down to the 97.50 level on the TLT 20-year bond treasury ETF. Apple, following the tech consolidation here, Apple new all-time record highs this week. And actually, if you look at the market, when it had its big pullback 2 days ago, we had a host of stocks hitting new all-time record highs. Apple, Amazon, Google, Netflix, and all of them precisely pulling back with the market. So I think it was more of just like, hey, the market's just got a little bit ahead of itself. We have all these record highs, and it was a good excuse to sell. I think Apple's going to continue to break out to the upside. Netflix has been pulling out back. Consolidation here, and if you look on a shorter term time frame, we need to hold support at about this 140 and change level. If you draw a trend line across, we do have this gap that needs to get filled here in the 130s. So this is something to keep an eye on for a bearish. You want to trade one of the fangs for a possible downside. I think Netflix could be your one, but I do think ultimately it's going to head higher in the medium term. Also, Google's been pulling back. If you draw a trend line across, you can see precisely. Let me see if I can get a trend. When you draw a trend line across here, we're up at record highs, and you can see this is the pullback I was talking about from record highs. This was a record high. We pulled back from that. This was a record high. We pulled back pretty good down to this trend line support. Are we going to get there? I don't know. If you draw a trend line here on a shorter term basis, we actually got to this trend line, which would mean a bounce up, new all-time record highs for Google. And how about energy? Energy's beaten down again. We surpassed that 70 level. I've been talking about this for years. That 70 level has been a really important turning point for energy. We broke above it in 2013. We got up to 92.50 plus. We broke below it in the middle of 2015. We got to 49.98, something like that. I think it was 49.98 or there it is, 48.81, 41. But you can see again, 70, we broke above it. We got up to 77.50. Well, guess what? We are back at 70 again. Now 69.11. We actually got to 68 and change yesterday. I think we'll see another breakdown for energy XLE to the downside. On the flip side, we have consumer staples breaking out. You draw a trend line across here. We have a nice bull flag. Consumer staples going to continue to work in 2017. All right, UPBOptionMillionaires.com. So two things really to watch in this market. Watch the VIX. Make sure it stays under that 13 level. And also watch IWM to hold that support at the 132.50 level. You can see we hit it pretty good here. Going to see a bounce maintain in this channel from a long-term perspective. Going to break to the upside. I'll see you in the chat room at OptionMillionaires.com. S&P 500 futures up almost 0.25% here this morning. Everyone have a great trading session.